English. My name is José Montoya. I am Senior Vice President for Appian Capital. Joined Appian 3 years ago as in charge of working with the team on sourcing of opportunities, of investment opportunities in the region, from Mexico down to Chile and Argentina. During these days, these 2 interesting days, I have been following the presentations, and we have been witnessing all the influence of growth and sustainability and technology on our industry. All the presentations in some way are linked to these immutable forces that shape our industry and generate trends of where is the industry going. We have been seeing an enormous pressure on the supply side. In some way, that's sparked by the decreasing rate on discovery of new projects, diminishing grades, and also, as Alfonso Martinez pointed yesterday, this immense lead time on the development of new projects. And not only that, but also the decarbonization and the energy transition that decarbonization is imposing in many industries and for many companies is also generating this strong need of battery metals that are forcing an interesting pressure on the supply side of this kind of metals. Although all this is happening on a context where ESG is a key aspect in any project and the way we are going to relate with all our stakeholders. And adding to that, we have technology that is always advancing. We have seen interesting presentations on how geophysics is evolving and is helping us pushing the costs down and being able to access lower grades. But I wanted to point to a specific trend that is also happening, and it has to do with the de-globalization. Nowadays, we're facing a world that is not only a unipolar world, but is a multipolar world, where nations are starting to wonder where are they going to get the critical minerals that they are going to need in the future. And geopolitics is now again over the table and is imposing new dynamics on probably resource nationalism, some interference with supply chain, pushing costs up. So all these, I wanted to signal all these trends because overall, we have a positive look. We think, we believe that this economic environment offers plenty of opportunities in the mining and metal space. And I think that companies like Appian can take part in developing the supply of metals that will be required in the future. I want to start mentioning what is Appian. Appian is a private equity fund that specializes in mining. And in simple words, what does a private equity fund do? The fund gets funding from investors with a long-term view on their capital and looks for opportunities where we can create value investing not only those financial resources, but also our technical expertise and our knowledge in project development in order to create value develop projects, and finally sell those projects, generating the returns that the investors are looking. So that's, in a nutshell, what private equity that specializes in mining do. I want to show that all these, it looks simple, but it took a long time to define. The founder, Michael Sherp of Appian, explained to us, like when he was working in a big financial institution more than 10 years ago in the metals and mining sector, he noticed some inefficiencies in the market. And this basically had to do with the financial sector not understanding all the technical details of the mining industry. And that was forcing bad decisions. And the same in the other way. There was not a deep understanding or a good understanding of the nature of the financial system. So the idea was, if it is possible to create a team of people that have a very detailed technical understanding of the mining industry, plus financial experienced people in the industry, and put them to work together, and there may be possible to find opportunities that the market is not considering, that the market is not pricing right, that offer possibilities of obtaining good returns. So this idea started 10 years ago with a very small fund, a small team of 8 people, 10 years ago, almost, in 2012. And 2 years later, the first fund of 375 million was closed. That small initial fund for mining, talking about mining, is a small fund, resulted in 8 investments that were finished 8 years later, 6 years later in 2020. 8 investments done in different parts of the world, and in some way confirmed the model or the initial thoughts of Michael, the idea of generating value in a faster way by detecting these opportunities. So the model of the fund was being tested. In 2020, when I joined Appian 3 years ago, the company had closed its second fund of 775 million. All Fund 1 was already invested. Some of the investments were being monetized, and the company had the challenge to demonstrate that the model was really possible to develop and prove that the model was working. 3 years later, 90% of those 775 million of Fund 2 are invested or committed, are going to be invested, and the company is finishing the fundraising of Fund 3. That will be 2.4 billion. So during those 10 years, the company has 3.6 billion under management, and it has done 24 investments in 15 platforms, in 15 mining operations, 14 investments in equity, and 10 in royalties. This is a map showing the different investments and how the company is distributed. By this, I want to show that, the locations are not exact, have moved, but the company, the headquarters are located in London, and the reach of the company is global. It really has 8 offices all over the world, and what we can see in the green dots are the exit investments, mainly, and all of them for Fund 1. We can see an investment done in Chile, in Caserones, an investment done in Colombia, the Red Eagle Santa Rosa, Antas Norte in Brazil. We had an investment in Canada, hard goal. And we have also exit investments done in Africa. And we still have different investments operations in Brazil. We have 2 operating mines in Brazil. We have investments in North America, recent investments in zinc, one in Canada, in Pine Point, and a second one in Namibia, the old Rosh Pina operation owned by Trevali, and a small mine in Italy, also zinc, called Vedra. So what I wanted to show here is that after these 10 years, we have 3.6 billion or invested or in the process or looking for opportunities with a global reach and the possibility to act in different parts of the world. We really favor investments in North America, South America, and Australia, but really we are ready to reach different parts of the world. But when we invest, when we partner with someone to invest in a mining project, what do we bring to the table? What's the idea of the model? We are a dedicated mining-focused investors. We have a full discretionary commitment of long-term capital that can be deployed in the project. And the beauty of this is that long-term capital matches very well the long-term nature of mining projects. We can keep our investments for more than 12 years, it can be even 15 years. So we don't have any pressure on exiting, and we will allow the management team or our partners to focus on the development of the project and not to be worried about how are we going to find the resources that we need, or the financial resources that we need to develop the project. We have a very experienced and focused technical and investment team. This team right now is formed by 65 people. When I joined 3 years ago, we were only 20 people. But this growth has to do with the third fund and the amount of money that we need to deploy. But this 65-person global team, it's really offering a wide variety of experience, tier one expertise, plus more than 500 years of experience in different key aspects, technical aspects of the business. We have developed an in-house expertise on financing and operational expertise, because once we invest in a project, we are not a financial institution. We invest in the project and we bring all our technical knowledge on our expertise on how to develop projects. Our aim is to develop the project in the most efficient and fast way to optimize the returns on the capital and then sell that project. So there can be also a very good alignment with partners that are looking to monetize their investment, and they are stuck because they don't find the financial resources that they need to develop this geological potential that they have. And we can be seen finally as a long-term, collaborative, value maximizer investor. You know? We can keep our investments for a long time, with the idea also to find the best way or the best way and the best moment to exit the investment. And we are able to bring value to the operation based on our expertise. So we can create value through the long-term funding that I have been describing, the technical expertise, the highest levels of governance and ESG practices are part of what we practice. We can also have or offer the possibility of unlock value from some to the companies from some non-core assets that cannot be developed because there are no financial resources. We can be a very good partner for that, plus the financial understanding of the markets. We are able to get good financing when the financing is required, not our money, but there is a point where a project is mature enough to access financial markets in better terms than using your own money. And a very important point, to facilitate the exit. Once the project is mature, it has been developed to its optimum value, there is a lot of money on the table based on the way you exit the project, the right time and the right process to exit the project. So in that sense, we're not a mining company. Our final goal is to exit the project. We're not going to stay and keep the production in our books. We are mining investors. Wanted to show quickly, this slide is kind of confusing, but we have been placing a lot of effort developing this team. What I wanted to show here is that we have a financial team, what we call the financial or investment team, that is working side by side with our technical and operating team. So we strongly believe that there is a competitive advantage by having those two teams working together. And it's really impressive when you get to know all the understanding and all the ideas and the knowledge that is developed by that interaction. At the highest level, we have the core partnership. It's Michael Sherp, Guillermo Kellin, and we have 3 senior operating partners, very experienced industry people coming from Anglo, BHP, and Rio that cover the different main aspects, mining, or geology, mining, and processing. And we have a very strong committee of senior advisors that always is very helpful. That's the top team. This is our advisory board. This is the technical team. I wanted to show these slides to show all the different disciplines that we cover. Really, most of the work is done in-house. We have the technical knowledge and very specific points, and depending on the project, are outsourced. Here, I think that the map is kind of blurred, but this map shows the different experience that the team has in commodities and in different parts of the world. So it's a very vast experience that allows us to assess the different opportunities in the best way. Wanted to mention that Latin America has been always a very important geography for the fund. Fund 1, 70% of Fund 1 was invested in Latin America. We have a team working now in Mexico that is led by Douglas Coleman as head of Mexico, Alain Charest as a senior advisor, and Hector Salas, that has been working with us for more than 4 years in assessing all the different opportunities that we have. We're based in Lima, in Santiago, and in Belo Horizonte. We have 2 operations in Brazil. So in Brazil, we have more than 5,000 people working in our 2 operations. So we also have an office there to look for business development. In Brazil, and it's important to mention this, there is an attraction effect. Once the country has seen the effectiveness of this model, people are looking and showing their projects and looking for Appian as a partner, not only to bring the resources that are needed, but also a partner that is a reliable partner to develop or unlock, I like that word, because many times we have this huge geological potential that cannot be put into value because of the lack of resources. It's key to our strategy in LATAM and in general to have these networks and a very in-depth knowledge of the place. So that's why I like to rely on local people to understand things that are probably not obvious when you look at the opportunity from abroad. Very fast about our mandate. We're running out of time, but this curve shows how value is created through the different stages of a typical project development, from exploration to production. We usually aim to invest in the beginning of the steep part of the value creation. We don't do investment at the very beginning. We don't do greenfield exploration. We're not. That's a part that we don't do, but we can start as early as a PA or a project that has already a resource base that is defined, not completely defined, but it's on a stage that allows us to think that that can be developed. And in this part, through the risking and that proper technical work and having all your financial resources to isolate the project from the turmoil of the market, taking the project to all these steps and the risking, an important value is created. Also, we try to avoid projects where the downside is not protected. We look for opportunities with good upside, but protection on the downside. And everyone looks for this, but you look at the cost position, the margins that a project can produce. But it's important for us to have a project that is in reasonable near terms to production. And it's very important for us to be able to enact government. And this always is a question about, do you want to have the control? More than control, we need a governance that allow us to really drive the project in the direction that we think will generate the most value in the best way. We cannot invest in a project where we are only passive investors and have a minority position on a public company. That's not part of the model that we follow. And we tend to identify what we call the alpha of the projects. In other words, how to create value without or in disregard of the movement of the price, value that has to do with increasing resources or optimizing operations. We are almost commodity agnostics. We can invest almost in every commodity. There are obviously some commodities that we favor more than other commodities. And this is an interesting chart showing that 8 investments done with Fund 2 at 375 million, and we show the time it took us to take the project to production. Or, I mean, we are part of the team that did that. But no, it's really short times before the project gets into production or is finally gets to the point where we want to place the project. It's only 1 minute left, so not much to mention here, but these are our 2 Brazilian operations, Atlantic Nickel and the Serrote copper mine. The Serrote copper mine, 20,000 tons per year of fine copper. It was bought at a pre-feasibility stage, and the Atlantic Nickel that was bought in bankruptcy for 50 million. We were offered 1.1 billion last year for the 2 operations. The transaction didn't close, but we're very near to close the operations. But those 2 operations show what I have been explaining and the capacity of Appian to develop the project, not only by bringing the financial resources, but putting into work all our expertise and knowledge and benefiting the partner with all the value that is created and obviously all the jobs and the high standards and the benefit for the communities and all the stakeholders. So thank you very much for your attention. Muchas gracias. Gracias.